Tech stocks moving lower as a group yesterday after the Fed brought forward its timeline for raising interest rates a bit. While the Nasdaq recovered most of its losses by the end of the session, you can see big tech stocks are in the red again this morning. Joining us now, Dan Ives, Wedbush Securities Managing Director of Equity Research, talk about the outlook for this group. Dan, good morning to you. I could see being bullish on tech maybe after a period of underperformance in the last 9 months and because maybe valuations are more reasonable. But why would what the Fed suggested yesterday, being incrementally more hawkish, be a net positive for the tech group?
Yeah, I ultimately think this at least puts out the realistic goalposts for the Fed. And I think better than most tech investors were hoping for. And that's why we view this as sort of a green light with risk-on assets across tech space. We think tech stocks are up 15% second half. And you look at the underlying growth that's transformational in cloud, cybersecurity, EV, e-commerce. But it's kept a cap on it over the last 4 or 5 months. Now I view this as sort of a risk-on moment and sort of the biggest opportunity right now that we see, given our view 16,000 Nasdaq end of the year.
What about the very largest Nasdaq stocks, though, are necessarily reflective of a risk-on environment? I ask that because these are big financially stable companies. They're kind of in the quality category, super profitable, much more stable than the average company. And then off to the side, you have a lot of the more maybe earlier stage, down the road, they're going to be profitable, but not right now. It seems like those are two different animals.
Yeah, I think you got to put them in two different buckets. When you look at a Microsoft as an example, part of why we think that's north of $300 this year, I think the street's still massively underestimating this digital transformation in terms of move to cloud. We think $2 trillion of spending, and that's going to benefit not just the likes of Microsoft, Amazon, Google, even IBM and others. Now, when you look at the hyper growth stocks, some names like DocuSign, Zscaler, or CrowdStrike, it speaks to what I view as sort of a golden age for cybersecurity and cloud. So those stocks, they're going to be expensive, but I believe they continue to grow into the valuation. I think you've seen more and more, at least I've seen from my conversation, the appetite for risk on going the second half of the year. I look at yesterday, and that was sort of what I view as sort of the green light to now for this next stage higher, despite the haters continuing to hate in tech.
What about Apple? What do you think has been kind of restraining that stock for a little while? And how does that kind of story and the perception of it change?
Yeah, and that's sort of been on a treadmill because I think most investors think the best is in the rearview mirror. But I continued to look at our checks in Asia. This super cycle is going to continue well into next year. And I think the monetization story on the services is just sort of in that middle inning of playing out. Now, I do think the antitrust, you got the Epic Court battle. I think that right now that's about $15 overhang on the stock. But I think we're sitting here late July when they come out with those numbers, handily beat the street. I think chip shortage a bit overstayed for Apple. And all the supply chain checks continue to give us confidence. A year from now, there's a $3 trillion market cap.
And just to hit on Tesla, just for a stock that obviously has had to give back a lot of last year's massive gains, looks like it's a little bit caught in between. There's a lot of excitement elsewhere in EV going on right now. Where's the field position in that stock?
Yeah, I think digestion period you have from all different angles. GM, Ford have obviously done a great job. You got VW and others. So I think the street's digesting just more and more competition. But when I look at Tesla, it's a $5 trillion green tidal wave over the next decade. They're going to continue to lead that charge. Despite all the skeptics, I do believe China continues to show strength in the month of June and going into second half. And that's another one. That's why we have a $1,000 price target on Tesla. I think there's just a painful digestion period rather than the end of this bull cycle, just given where we view EV still in kind of the first, second inning of playing out.
Any slices of tech you feel like still are a little bit treacherous or not as well advantaged here?
Yeah, to me, it's hardware. I mean, I see more and more from our CIO and conversations, IT manager. You're seeing more and more move away from hardware towards software, cybersecurity, cloud. I'd be underweight some hardware pieces and more bullish on software. And that's why I see a lot more of the next-gen technologies going. And even look at IBM, more and more focus on cloud. I think that could be a potential re-rating story.
IBM focus on cloud being a net positive because it's de-emphasizing hardware?
Exactly. I mean, look, I'm not going to compare it to Microsoft and the Dell Golden Touch You look what happens in IBM, and they're starting, especially in the hybrid cloud, benefit more and more. That could be a re-rating stock as we get closer and closer to sort of the splitting of those businesses. And I think Arvind is sort of in the middle of what potentially could be a pretty significant turnaround at IBM. That's one I'd watch out for.
Shepard Smith here. Thanks for watching CNBC on YouTube.